All right, so I think especially the last couple of months have been perceived as being extra volatile for the market. So how are investors handling their trades during this volatile time?
Yep. I think one of the key things to remember, so I work for Betterment. We tend to see a very specific kind of client who tends to be a sort of long-term, not active trader. They're not coming in to speculate. So for the most part, we've not seen much. One of the things that has been different and that I think is more of a modern sort of internet-enabled, always-on news cycle thing is that the news and the relationship to portfolios is sort of more politicized. So one of the biggest divergences we've seen in behavior was, and that has persisted, is since Trump was elected, there was a big divergence. How you thought about the stock market if you were a Democrat became very different than how you thought about it if you were a Republican. If you were a Republican, you became very bullish. If you're a Democrat, you became concerned about things. And for every little cycle since then, I would guess that a lot of Democrats have missed out on a lot of the rally that's happened since he was elected. But by the same token, every time there's some news event, especially around trade talks that are highly political, there's sort of a differential reaction where some people get more bullish and some people get more conservative. It's been interesting to watch that play out, even a little bit inside of our customer base, where people who are living in areas that tend to be Democratic are a little bit more sensitive.
Right, and I think it's interesting how just the headline sensitivity, the minute you think that the bears have really taken hold, we'll just start rebounding higher. So for, I think, a little bit more active traders, it is a little hard to kind of gauge the tone. So what should investors then be doing when there might be all of these mixed signals in the market?
Oh, I mean, that's if you want to try and beat other people's estimates of the market, you're going to have to take on that stress, right? One of the key things is that one of the rise of passive investing, especially low-cost investing, it has gotten easier to trade and sell things, but the market has probably gotten more efficient. There are more computers looking at these things, so it's harder to say that any given individual is going to have an edge that they should be investing in. At the same time, it's never been cheaper or easier to get into a sort of low-cost, tax-managed portfolio.